Hello everybody and welcome to another amazing video of DIY investing. Over the last couple weeks we've been talking extensively about how Bitcoin has successfully broken out and retested 25K. This is what we needed to see in order to get the reversal and the next leg up in this cycle. Now for today's video, I figured today would be a great opportunity to actually go back, look at every one of our bull markets, and share with you guys how long it's actually going to be taking us until we get to a cycle top. We're going to be looking at the next 2 to 3 years from this cycle low, sharing with you guys how prior cycles have played out, how long it's taken before we've made a new all-time high into price discovery, and how we can actually prepare ourselves before that move actually takes place. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, here we are to start off today's video. I figured today would be a great opportunity by actually looking out at the entirety of our market cycles, analyzing each and every one of our bear markets as well as the bull cycle, and sharing with you guys how many years it actually takes to develop. Now, I wanted to talk to you guys about this video today because of the fact I have so many people that don't understand, what an entire cycle looks like and how long it actually takes to play out. Most people, when they get into a market and they start investing, they don't understand the time, and in my opinion, the most valuable prospect that you can have when it comes to developing a trading plan specifically catered towards investing is understanding the length of time that we need to be buying and holding. In crypto, we have an opportunity to actually follow 4-year cycles. Now, the question has always been, are we going to continue to follow the 4-year cycle, or is it going to change up? And that's not really the focal point of today's video. The focal point of today's video is just simply mapping out how long each and every one of these cycles has taken, and what we're looking at right now and how it really applies to what we're seeing today. Now, we're going to go back and we're going to start with this video being all the way back over here in 2015, 2016, well, really 2014, depending on where you draw it. Now, I wanted to talk to you guys about this update here because of the fact this is going to help you guys to be able to conceptualize where we're at in this cycle and how much further we still have. And, are we early? Are we late? Where are we at in the grand scheme of things? Now, the way that we're going to start this is by making a data point at the all-time high, and we're just going to go in increments of 1 year in duration. So what I mean by that is we're going to draw our data point at the all-time high, and then we're going to go 365 days from that point, and then that's going to give us our next data point. Now, the reason why we're going in yearly increments has nothing to do with the 4-year cycle. It's just sharing with you guys how many years in a very easy to understand way. This gives us our first year. Now, inside of bear markets, what you're going to see for Bitcoin anyways is that they almost exactly last 1 year. Now, this one was one of the longer, I think it was actually the longest bear market that we ever had. So we can see that we made one more final low before that was over. But once again, we're not trying to just fit everything into this. We're just going by 1 year increments. And this is what's beautiful about crypto is the fact that we get those same similarities. Almost an exact bear market from top to bottom. It was about 1 year in duration. And so now we're going to go to our next data point. We're going to make this even. We're going to go another 365 days in advance. And then this is where we're going to get our next data point. Now, what I find interesting about Bitcoin, and this is going to be the staple across every one of our cycles, even going into this cycle today, is you have the first year, and that's basically just the bear market. Give or take a few days. Sometimes it could be, bottoming slightly before that year-long threshold, or like this one did, we had one more final low before our true bottom. But what we're going to see is Bitcoin bear markets sync up into about a 1 year cycle. So this was our first year, and then we get our next year. Now, what I find interesting about this next year is this takes us through accumulation, and then this gives us our first breakout outside of accumulation, right? This was the breakout that we saw where we actually flipped accumulation as support. And that was where we get our next data point, was right there. And this is where we actually start our uptrend. For the first time, Bitcoin begins uptrending in this new cycle. And that's what we can see indicated by basically this trend line here. So if we come over here, we make this even. We go another 365 days from that point. We're going to be getting us closer and closer to the point of a breakout of those all-time highs. So if we draw our data point here. Now this is something that I talked a lot about in the last cycle, and what I called it was basically the 3-year bull. Now, what I mean by bull is not B-U-L-L, but B-O-W-L. And what I mean by that is basically just a rounded type of accumulation. And this is what's going to happen every single one of our market cycles. It's going to vary to some extent. You know, our last cycle, we only accumulated for about 90 days, whereas this one was 280 days. So every single cycle is going to be a little bit different. But we do go through the same turn of events. The 1 year bear market comes through, and that's indicated by this. Lower lows, lower highs. Then that gives us our next year. This is basically the accumulation phase, or it was for 2015 and 2016. We go sideways for a year, and then after we get that data point, we start our 3-year part of the cycle. And this is where we start uptrending, higher highs and higher lows. So the first year is a downtrend, lower lows, lower highs. The second year is sideways accumulation as we ultimately build our bear market bottom. And then our third year is where we start the uptrend and do the inverse of year one, higher highs and higher lows, right? And so this is what we're going to see over the course of this first cycle, taking place at a cycle top at the end of year 2013, and us actually going through this exact same type of thing. Now, what I find beautiful about this 2016 cycle is it literally just looks like this goes through this little accumulation, and then it just turns into the exact opposite. It's just like this just got mirrored and flipped in the reverse. And it's really easy to follow along with what I'm talking about, basically starting off with this first cycle. Now, this takes us into our next data point, right? And this takes us to basically our blow off top. And it's all going to vary to some extent. No cycle's ever going to be 100% the same, but we do go through almost this exact same turn of events every single time. And this is what takes us to year 4, and this is the ending of that bull market. So we can see that our data point comes right here. We still got quite a bit of price action. In fact, we about doubled in price. We get this data point taking place at about exactly 10K. And then we ended up topping at almost exactly 20K. So we ended up getting about 100% price gain shortly after this fourth data point. But this is why I say, guys, if we're trying to follow specifics with time, we're going to follow the 4-year cycles, or we're going to follow, you know, the transition into a left translated cycle, which would basically be the inverse of a 4-year cycle. Over the last 10 plus years, Bitcoin has followed a 4-year cycle. And so that's why we're going to continue to stick with that until we've been proven wrong. But we're going to have early signs of that if we are going to be proven wrong. Up to this point, we've continued to follow the 4-year cycle, considering we bottomed at the end of the year 2022. So right off the bat, we're not going to be getting into that. All we're sharing with you guys right now is simply just how long each one of these cycles takes. And what we're looking at from the cycle top, the all-time high, the blow-off top, we're looking at 4 years to our next blow-off top, which, you know, once again, is why we follow the 4-year cycle. But this is the way it kind of is going to look, right? 1 year bear market, 1 year accumulation, breakout into the new uptrend. That's year 3, higher highs and higher lows. And then at the end of the year 3, we're pretty much getting right at those all-time highs. And then it's year 4 where we see us go into price discovery. And so if we come over here, we're going to remove these drawing tools, and we're going to look at how this applies going into 2018, 2019, 2020, and 2021. Because in my opinion, we're going to see a lot of the same similarities, even though the price structure is completely different, right? By looking at this, we can see that both of these cycles are very much different. This cycle is quite a bit different in the way it looks. We just got this downtrend, sideways, and then an uptrend. Whereas this one was quite a bit choppier. It was a lot more up and down, side to side. And so this is why I say it's important that we go back and look at each one of our cycles, because it's important to understand how they differ, but how they also rhyme at the same time. So we're going to apply all of this same thing that we've been talking about. We're going to draw a data point at the all-time high, and we're going to draw another one after 365 days. So if we come over here, 365 days takes us right here. We're going to draw a data point, and we're going to see where this bear market actually perfectly followed a 1-year downtrend, right? Even though the price structure is a little bit different, this is still just a 1-year bear market, which is the exact same. You know, the last one in I guess it'd be 2014 to 2015. That one was, 412 days to be 100% exact. And our data point in the last cycle took us, we had one more final low before that was over. Whereas in this cycle in 2018, it basically took exactly 1 year. From the all-time high to the point of us bottoming was exactly 1 year in duration. So this is where Bitcoin's going to follow a little bit closer to these 4-year cycles. It's going to fit a little bit more symmetrically. And it doesn't change anything, it just means that it's easier to follow along with. Now that gives us our first data point. So in the same way that our first cycle played out, the bear market is just a 1-year downtrend. Now this takes us to our second data point. Make these even, 365 days. And this is going to take us to, another relative point in the cycle. The only difference here is this was a much greater move off of accumulation, and accumulation was a lot shorter. This was 3 months worth of accumulation, whereas in 2015 it was 280 days, right? Almost an entire year worth of accumulation. So this is why every cycle is going to be unique in its own way. But at the same time, what we're kind of looking at here is accumulation and the breakout into that first cycle. And what I find really interesting about this one is the fact that after this year, when we went into the year 3, we actually ended up seeing this lower low. And this is where things get a little bit tricky. Most people, including myself back then, weren't expecting that we would get this lower low. But a lot of that was enhanced because of the COVID sell-off. And so we have to be aware that if every cycle is going to be 100% the same, everybody's going to know what to do. And that's just not the way markets work. There's always going to be little tricks inside of each cycle. There's going to be sell-offs that take place that people don't expect. There's going to be black swans that end up playing out sometimes. Do I think that there's going to be a black swan event this cycle? Well, it's hard to say. I mean, so far in every one of them, we've always had one. COVID was by far the biggest one that we'd ever had. Bitcoin had never been in anything like that. But, going back even into the 2016 cycle, right here at the all-time highs, right when we started breaking out, China banned Bitcoin. And then we saw this 40% sell-off right here. So we have to be aware that there's going to be, different factors that are going to knock the price both up and down. But in the sake of this video, we're talking about downside price action. And so we have to be aware that, even though we're going to most likely follow the same time frames, the way that the market price action is going to look can vary each and every cycle, and we have to expect that to be the case. Now, this takes us into this year 3, year 1, year 2. Now we go into year 3. So 365 days takes us to right here. Now, this is where we're going to start syncing up pretty consistently with that 2015 and 2016 cycle. We can see that this was where we actually broke out and made a new all-time high. So in 3 years, from the all-time high of 2017 cycle top at 20K, it took exactly 3 years for us to make a new all-time high. And then, in the same sort of way that we played out inside of 2015, 2016, and 2017, year 4 ends up being the blow-off top. Now, this blow-off top was a lot smaller than 2017, and if we come over here and go to 365 days, we're basically going to be looking at us topping slightly before that threshold. So once again, guys, it ended up following pretty much the same thing, but the path to get to those time frames was quite a bit choppier. If we're comparing what we saw in this cycle in 2015, 2016, and 2017 was just almost too perfect, right? Perfect downtrend that lasted about a year, perfect accumulation, perfect uptrend to the point of us breaking all-time highs, and then in year 4 we saw one of the most glorious blow-off tops in market history, not just counting crypto. So that 2015 to 2017 cycle was a thing of beauty. Now, going into this most recent one in 2017, 2018, or what I should say 2018 to 2021, we saw a lot more of a choppy type price action. In fact, if we're looking at the way that this played out, this was basically a giant contracting triangle formation, right? And that was the way that this market consolidated. It was a lot more up and down, side to side, back and forth. It was not very similar to what we saw in that last cycle. However, the time frames were very similar. If we're looking at the all-time high to the point of us breaking the all-time highs, that took 3 years. And that's the same time frames that we saw in 2015 and 2016. Now, if we're looking at that once again, even though the price action differs, we saw the same thing. It was going at the end of year 3. That was really where we broke out and made new all-time highs. And year 4 was the blow-off top. Although this blow-off top was a lot smaller, it's still following the same time frames. And so The point I'm trying to make here is we don't know what the trail is going to look like, right? We don't know what the road's going to look like. There could be a pothole here, there could be a giant dip here, there could be a speed bump here, and then maybe the next trail or road, so to speak, is just a nice, smooth, sort of, easy ride. We don't know exactly. Now, one of the things we have to remember here, guys, is the fact that every cycle is bound to be different. This cycle, the one that we went into this triangle, this was the first time institutions were involved. And I don't find it, coincidental that this was also one of the choppiest times that we've ever been in for a market cycle, when it was the first time institutions got involved. I think that that is their ultimate goal. Make the market as volatile as possible, make the swings high and the swings low, very low, so that they can trap as many people, so that they can get and accumulate as much Bitcoin. Because the more volatility, the more opportunity for profit for these big money movers. In the last cycle of 2016 and 2017, there was a lot less volatility and it was way more symmetrical. But this was a time where institutions weren't involved in Bitcoin, so it would make sense why it would be a little bit more of an easy trade, so to speak. It's not that it was necessarily that much easier, but in comparison to this bear market, it was. Now, this takes us into our current cycle, and we're going to apply all of the same stuff with what we're seeing today in hopes of understanding, what to expect moving forward from here. So in the same way, we're going to draw a data point taking place here at the end of the year, or the blow off top, right? End of the year is obsolete. Just the blow off top is what we're focused on. So we're going to come here and we're going to go 365 days. And this is where we're going to get our next data point. Now, what I find really interesting about this most recent bear market was how, in the exact same way that the 2018 bear market lasted 1 year from the high to the low, this one did the exact same thing. From the high to the low was exactly 1 year in duration. And so inside of a Bitcoin cycle, it's going to vary around a year. 2016 or 2014, I should say, was actually just, 412 days. So it actually extended past a year a little bit, whereas the last two bear markets have been exactly 1 year. But, who cares? That's apples to oranges. It's basically a year. We're almost exactly in that year threshold each and every time. So now this takes us to year 2. We're going to get our next data point, 365 days. Now, what I find really interesting is we're actually really close to hitting that next sequence inside of these multi-year processes. We already finished the 1 year bear market, and now this starts the accumulation and the uptrend. Now, in 2016, it was a little bit different. Notice how we spent 280 days just going sideways right here. And then we went into one breakout. Already we're different in the last two cycles, right? This cycle spent 3 months and then we made this big breakout. In this cycle, we spent, a very short period of time in this bear market bottom. It wasn't even 2 months that we spent in here before we started breaking out. So each and every cycle is going to be a little bit different. So far, the way that I look at this as behaving a lot more similarly to what we saw over here in 2019. I still believe that we're most likely going to get one more final high that takes us upward to $48,000. And so it'll end up looking a little bit more consistent with this 2019 cycle. But the thing that we have to remember here, guys, is from our bear market bottom to the high of that first breakout, this was only 194 days. So it wasn't even 200 days that it took before we were done with that first impulse. Right off the bat, we're already far surpassed that. From our bear market bottom, 200 days was basically taking us to the point of us flipping 25K. And we've now spent almost exactly 1 year from our bear market bottom just slowly uptrending and building a foundation. So right off the bat, we're already far surpassed that. If we still have one more high coming, then this entire uptrend is going to be taking a lot longer in this cycle than it was in our last one. And so one of the things the reason I'm bringing this up to you guys is because of the fact from the high of this move, remember it was 194 days from the bear market bottom to the high, and then from that high, it was like almost 500 days, basically exactly 500 days before we ended up making a new high above that. Because of the fact this is already far surpassing that in time, I don't think that we're going to get as lengthy of a reaccumulation after we get this next move. I think that it'll be, a little bit shorter just because of the fact we have to keep in mind these multi-year processes. We've never seen Bitcoin go past 3 years necessarily. It's right around the end of that 3-year mark that Bitcoin breaks out and goes into a new all-time high. That was the case here. That was also the case back in 2016. And so up to this point, we've pretty much only followed those exact same time frames. Our bear market has been exactly a year, and we're just starting. We're basically at the end of that year 2 mark, right? Which, if we're looking at all of these, year 2 basically took us to the first high of this cycle. Year 2 was right here. The end of year 2 was when we broke out, came all the way back down, retested this 6K support floor, and even though we saw one more final low after, it's more similar to what we're seeing today. The big thing that we're seeing up to this point right now is the fact that this had already finished a peak, and then we were correcting back down. In my opinion, this is missing its peak. So right off the bat, we're seeing a little bit of a difference, although that the price action does look similar. So we're not necessarily comparing exact price action. We're looking at the time frame so that we can have an idea of how much further we have. We finished year 1. We're about to finish year 2. And then after that point takes us to year 3. Now, at the end of the year 3 is generally where we're going to be breaking out and making an all-time high. So if we draw this next data point, let's get it perfect. We're looking at the end of the year 2024 as being the point of us actually breaking out and making a new all-time high. And so the reason I wanted to share with you guys this video today is to help you guys understand how much further we still have and how early we really are. Even though we're made, the first impulses of this new cycle, even though we've already far surpassed the cycle low being $16,500 approximately, we still are not very high up in this move. And it's taken a very slow, methodical approach as we've built a foundation of support, as we've built a foundation of ascending support, trending into this new bull cycle. And so, even though the price action is going to differ, we don't know how 100% the price action is going to play out. Even if we already peaked here and this ends up being some type of lower high before we do something like this, in my opinion, this will just be, a smaller version of this. And we're already at those same thresholds to where I don't think that it's going to change anything that much. It's just simply looking at how much further we still have to go. And we haven't even finished year 2 yet, right? We're at the ending approach of year 2, which historically has been an early point in the cycles. I mean, if we look back at over in here, in the 2018-2019 cycle, the end of 2019 was right here. This was the end of year 2. And if you would have bought over in this period, even though we saw a lower low after, I'm sure that you guys would have been more than thrilled accumulating at that level, because this is what ended up taking place in year 3 and 4, right? And so that's going to be the case across the board in every one of these cycles. Remember, the end of year 2 was right here for Bitcoin in 2015. Everybody would have been thrilled to be buying at those levels. Even if you bought the top right before that, you still would have been thrilled considering you were buying a $500 Bitcoin. And it went to $20,000 inside of year 3 and 4. So when we're looking at this today, we're approaching the end of this year 2 mark, which historically has been a phenomenal buying opportunity, or, just blindly buying at the end of that year 2 mark has been a very low point inside of the new cycle. And historically, we've seen the market far surpass those all-time highs. Now, the question comes, does this cycle end up behaving more like the 2017 cycle, where we get this glorious blow off top, or are we going to expect to see a less volatile cycle? The parity is a lot more consistent with the last one that we saw. In my opinion, I believe that we're getting ready for a much bigger cycle that is very similar to 2017. And the reason why I don't think that we saw that in the last cycle is because of the fact we had way more institutional involvement, and we also had shady market conditions, right? We didn't really know what was going to happen. The pandemic was going on. Everybody was locked in their homes. There just wasn't the amount of buying support that we had in prior cycles. Most people were just trying to live and not die, and everybody was so scared about the pandemic that nobody even left their homes. So I don't believe that that was any sort of, big buy signal. I don't think that that was helping the market cycle in any sort of way. I think that it was ultimately hindering the progression that we were going to experience. Now, that's why I believe that this cycle is gearing up to be so much bigger, is because we were suppressed in the last cycle, and we don't have all of those same negative news events to kind of, make us go down in the cycle, make us have less buy pressure than before. The only real question would be, does war come out? Do we have some major war that's about to take place? A global war event, another world war of some type? Because, yeah, that, in my opinion, would ultimately be negative to the markets. But we don't know if that's even going to be the case. We're not trying to predict black swan events. We're not trying to say that this is going to happen for sure. We're just trying to basically theorize with what's taking place. This is why I like to stick to time frames, because I still know that we have plenty of time left before we're at the same, thresholds of the last cycle. I'm personally not expecting a breakout of all-time highs until sometime at the end of the year 2024. So we still have plenty of time that we just simply need to be looking to accumulate, simply be looking to hold, because the bulk of the profit takes place in that final year 4, because that's generally the blow off top. That was the case here, even though the blow off top was pretty small. That was the case here, even though the blow off top was much bigger. It's better to be prepared for anything, and if you're prepared for a smaller blow off top, then the best way to be prepared was be buying down in here at these low points, because you're going to maximize the most profit potential by doing so. Now, if you want to prepare for this type of blow off top, it's the same thing. You're simply looking to be buying down here at the relatively low point in the beginning of the cycle, because that gives us the best opportunity for profit once that market takes off. The big thing I want you guys to remember, we should be looking to hold until sometime 2025. Really, we're looking at the end of the year 2025 is that next topping point. So let's come over here and draw our final data point. We're going to go 365 days, which is going to be taking us to November of 2025. That is where our projected cycle top is going to be. So right off the bat, guys, we've only finished the 1 year bear market, and we're nearing the end of year 2, which historically has just been the beginning of the uptrend, the accumulation and the beginning of that uptrend. We've already gotten out of accumulation, which was this low down in here, and it really could have even been in June, considering the fact ETH and many altcoins never made a lower low past June. But regardless, we're in that same territory. This is just the first higher highs and higher lows of the beginning of this cycle. And no matter how it looks, kind of the way that I'm anticipating it, I still think that we're going to get one more final high up here, top at about 50K, 48,500 to be exact. And then I think that we'll go through a little bit of a period of accumulation, reaccumulation at that, coming back down to about 30, I'd say 28 to 25K would be the level that I would be watching for. And it'll be similar to kind of what we saw over in here, but I don't think it's going to have the same length of time. It took 500 days from our peak to the point of us making a new high. I don't think that that's going to be the case. I would find it more likely that we would start the approach of breaking out and making all-time highs right here at the beginning of and the end of this year 2, beginning of year 3 mark, considering historically that's where Bitcoin has been. The end of year 3 was right here, right when we're flipping those all-time highs. The end of year 3 in this cycle was right over here, right as we began the approach to break out of all-time highs. So inside of this cycle, considering the fact nothing is different up to this point, we still went through a 1 year bear market. If this bear market was just significantly longer than even 2015 was, then at that point, we would be able to, draw a different conclusion. But so far, we're really just following the same time frame. So what we're going to be looking at is us breaking out and making a new all-time high right at the end of year 2, beginning of year 3. And then year 3 and 4 is where we see that massive, type of blow off top. Whether it's big as 2017 or whether it's smaller like the last cycle, it doesn't matter if you're accumulating back down in here, because that is where the majority of the profit is made. If you're buying altcoins really aren't going to do anything until Bitcoin starts getting past those all-time highs. And that's the case every one of these cycles. Altcoins are going to underperform, they're going to lag, they're going to make new lows, they're not going to do a whole lot. But then once Bitcoin flips all-time highs, that's the point where altcoins are really going to shine. And that's been the case every single one of the cycles that I've been through. This is my 3rd bull run. All the last 2 cycles that I've seen have played out in the same way, as far as once those all-time highs are broken, that's where the glory starts, that's where all the profit starts. And so, we're still quite a ways from that point. We're nearing the end of year 2, which will be putting us in that final year 3 that should be taking us to those all-time highs. But I think that year 3 is probably going to be a relatively slow year. I think that we'll have, one more final peak here, but then we'll go through another period of reaccumulation where we'll probably see another 40 to a 50% sell-off, coming all the way back down to basically the levels that we're at today. So just keep that in mind. Just remember that this is a long-term game. We have to have a long-term approach. And the only way to have a long-term approach is by understanding, the average length of time playing out in each one of these cycles. So If you guys found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these updates. If you guys want to see what I'm invested in, if you guys want to follow anything over the course of this bull run, see how I'm positioning myself going into this cycle, links are in the description. Go ahead and sign up on my website. I appreciate you guys. I love you guys. And the reason I make these videos is simply just to inform as many people so that we can be early, so that we can be prepared, and we can maximize the most profit potential possible. The least amount of people that watch this channel are going to be about right now, after we've just went through a bear market, after we're in the early beginning stages of the new bull market. Most people are gone. Most people don't care about crypto, but that's exactly why the opportunity of getting in is right now. So we're going to see all of the same events turn around. Everybody's going to get re-enthused about crypto. Everybody's going to come back into the market, but you're not really going to be seeing that until we start getting past those all-time highs. So just be aware of that. Understand that we are very much early in the grand scheme of things. Even if you buy now and we make another peak and have to come back for a 40% correction, that just gives you a second opportunity to be buying at these same levels. So this is what I wanted to give you guys an update on. Tomorrow we'll probably end up covering 4-year cycles, go into some more details with that, and then talk about how this actually applies with all of it. Anyways, thank you all so much for the support. And with that being said, I'll catch you in the next one. As always, peace out.